The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the May 4th Magical Monday edition of Hour 2 of the Trader's Edge. I'm your Steve Rhodes and hope that you're off to just a terrific start of your day. Let's make sure that you and I, we do everything we can to have an extraordinary Monday. Of course, the easiest way to do that is to always remember that what's talked about is a dream. What's envisioned is darn right exciting. Of course, what's planned becomes possible. What's scheduled is real. And I want to really thank you for scheduling your time with me here this morning. I am honored by your presence, and I'm here to serve you. Feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can call in at 727-445-1044. Remember, if you've got a question, there are all kinds of people that have that exact same question out there. So how about a random act of kindness? You call in for them out there because that's the way to start your magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now we got Dow. Dow is up 95 points. She's trading at 18,118 and change. The S&P is up 11. She's trading at 2120. Composites up 33, trading at 5,039. Russell's up about 11 points at 1238. DAX is up 170 points. FTSE's up 25. Gold's up 14 points. Silver's up 46 cents. Light sweet crude back 47 cents right now. Priceline leading the charge, the upside. Let's take a look at Priceline. Priceline is trying to take out a B point this morning and trying to do it with volume. Of course, it's pretty early in the game, only 40 minutes into the trading session. But 1264 is the number you want to navigate and keep your eye on. That is the high from the February 26th out there. Volume is 935,000 shares. We have seen 109,000 shares in 40 minutes of trading. Straight line math says it's possible. It's very possible. I don't think it's going to have the volume today, only because on a straight line basis, and we get more volume in the first hour and the second hour, and the first hour and the last hour, last half hour, and in between, it's kind of, whole hum. Nonetheless, you take out 1264. I don't care if you do it without volume. That still says that price can go make that 1-to-1 A to B equal CD price projection in the 1404 level, and that is on Priceline. Also moving to the upside, Intercept Pharmaceuticals, Tesla. How about Wynn? We took a look at Wynn a few days ago when it was just simply cracking and moving to the downside. You and I, we drew in that descending price channel out there. Pretty cool, huh? Because not only did you and I draw that in, that's exactly where price stopped. Now, big volume to the downside inside of Wynn. 16 million shares basically on April 29th, ran into the support level, moved into a oversold-ish type area. If we take a look at our relative strength indicator, and right now it's back inside that gap. It's right above the high of the gap from April 29th. That high was 117.05. You're trading at 118.10. It does look like price will likely gravitate up to 127.66. The question is, will it find resistance there, or will it go up to the top of the descending price channel out there? I don't know. I just know that it's inside that gap. If it closes inside there, expect it to at least get up in that 127-ish area. That's what's going on inside of Wynn Resorts. We got a winner out there. Let's go take a look at the index ETFs. Let's start off by looking at the QQQ series, up 63 cents. 5.6 million shares as of 12:10 a.m. What do we know about the Qs right now? Well, the Qs here from high to low. That means the trading day of April 27th. To the low out here of April 30th, we can see that the Qs, in essence, have gapped up into that 0.618 retracement level. 109.59 is the number. The high today, so far, has been, thus far, 109.91, but the real number that you want to be paying attention to is 110.02. That is the low of April 27th. 31 million shares. 6 million shares have already traded hands. That says you're moving into that swing point with volume. Any close inside of 110.02 is going to get you a test of that 111.16. Now, I can't guarantee it, but I can tell you it increases that probability. Hey, let's face it. You close inside 110.02 even with light volume, says you can go test that high out there. But if you're pushing into a swing point with volume, it says one of two things. You're either going to go test it or you're going to go ahead and take it out. We won't know until we see at least a test of 110.02. We're not there yet. We just know that we've got volume moving to the upside inside of the QQQ series ETF out there. If we go take a look at the IWM Russell 2000, weak like a weakling out there, because I don't know what else to say. I know strong like bull, but weak like what? Maybe you've got an idea that you can share with me that I'll always remember out there. Nonetheless, this is one of the weaker of the four index ETFs that we take a look at out here. Thus far, what we have seen inside the IWM came back to the swing point from March the 10th. The high there was 120.70. That volume only, what was it, 32 million shares, but price came back with 72 million shares. Holy shnikes out there. Right now, the IWM, where could this head to? Well, it can certainly be lifted by the rising tide inside of the QQQ series ETF. But right now, it's only made a dead cat bounce. That shows you just how weak. Remember, the Q is gapped up into and above the 0.618 retracement level. The IWM only making a 0.382 retracement thus far. 123.13 is its number. It's trading at 123.06. That does not mean it will not run to the 124.66 level out here. It just means it is quite weak when we take a look at the other remaining two. For example, if we look at the Dow Diamonds, up, we'll go back and look at the SPY. The Dow Diamonds up $1 with 1.1 million shares out here. What are the Dow Diamonds doing? They're headed out here to this swing point from March the 2nd out here. That's got 3.2 million shares out there. The volume so far today, 1 million shares. It has not gotten down to the bottom of that, which is 181.37. The top is 182.68 out there. It should have no problem taking that out. But what we see here is this nice, well, I don't know if it's nice or not. It's pretty frustrating, I think, to most, because this is a market that one day the bulls feel like they can beat their chest and that they're moving higher, only to have the carpet that they're standing on get pulled out from underneath them. And then you got the bears doing the next thing, as if they're just simply going to take control of the market. And then what do we have? We have the Dixie Stampede. We've got the bull stampede out there that just simply crushes the bears. So we've got something for bulls. We've got something for bears out here. We've got no breakouts. We've got no breakdowns. We've seen some volume to the upside. We've seen some volume to the downside out here. We're just simply trading sideways. That's the pattern. Trade sideways to higher. Let's not forget the NASDAQ is up 5% for the year since the beginning of the year. The Russell up, I don't know. Well, I have to go back and compute it because I don't have that number, but it was up around 3% maybe before last Thursday, so maybe it's up about 2% or so right now. So, but still not a hugely active market. So, what are the Dow Diamonds doing? Look, you're going to go test 181.75. They're going to go test the 181.37, and maybe they're going to go test the 182.68. What I can tell you is from a summation index, the bulls are firmly in control as we speak right now. Their price oscillator is well above the zero line. Only if there's some major selling that comes in will we see anything other than a test of the highs out there. Of course, you say, shoot, you could have come up with that conclusion yourself out there. I'm just giving you what the conclusion of the markets is. Now, the swing point here that you're looking at inside the Dow, by the way, is 18,122. You've already tested that here this morning. Remember, the ETF is going to look a little different than the indice. You've got fees, you've got dividends that are being netted out inside the Dow Diamonds, the SPYs, the Qs out there. So what you want to do is make sure that you're also always coming over and taking a look at what's going on inside of the indice out here, as we just did. So any close today inside 18,122, that says you're going to go run up and test those highs out there, or you should at least go run up and test those highs. If we come over and we take a look at the SPYs right now this morning, this SPY trading up with 14 million shares, $1.10 to the upside, trading at 211.83. What do we know about the SPY? Well, number one, up above its TAS market profile resistance level, bullish or bearish? Bullish. What is it moving into? Well, it's swing point out here. Now you got really two to deal with. You got February 25th, 73 million shares. You've got that key reversal session day on April 27th, 79 million shares. So you'd have to say the 70 million share number is really going to be good enough for us to see if it can catapult and get above to 1171, or get above, even more important, to 1248 the day from April 27th. Nothing more bullish than a failed bearish pattern out here. A key reversal session, not so much a pattern, but let's just call it a bearish signal out there. So nothing more bullish than a failed resistance level, and that is PS. Daily resistance, and that is the high of 212.48. Does look like that high is going to be tested out there. Again, volume so far, 14 million shares, which is pretty darn good for 45 minutes of trading. I just don't, I ought to have a little, I'll do it. I won't have time probably till after my workshop, but I continue to, what's going to be a beautiful workshop this coming Thursday. You know, folks, we spend a lot of time. I spend a lot of time. I spend 2 hours a day basically with each of you taking a look at different patterns out there, right? We look at rising and descending price channels. We look at Chapman wave counts. Stevie likes to focus on those seventh wave patterns out there. We take a look at price relative strength divergent patterns. One of my favorite. Why do I say my favorite? Because it is the absolute most consistent pattern that is called every single market top out there. 2007, 1929 out there. I mean, it's called them all. It is the most consistent pattern out there, and it works on an intraday basis and so forth. But that pattern, we take a look at TAS market. We use all the tools that we have here at TFNN. We take a look at volume, as it's moving into, as it's making lows, right? There's always new ways. There's always new ways of discovery out there. If you believe that everything's been discovered, you don't believe that. Out there, there's always new ways to use old tools out there. Maybe no new tools out here in technical trading, but certainly. And here's the deal: we take a look at all these patterns. We focus on all these patterns. I give trading courses, whether it's a master trader or it's an overview on something out there. And you yourself, you've become a master of some of these patterns. You know you have. But the reality is, why do some of these patterns set up and then you don't take the trade? That is what I'm going to answer for you, and that's what I'm going to teach you how to break through this coming Thursday at 6:30. Because for me, it's really all about teaching you how to break through. And that's what I want you to do. And I want these markets to break through as well, whether it's to the upside or the downside. This is Steve Rhodes with TFNN. We'll be right back, folks. Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Nico and Paige would be happy to hear that Stevie here has been doing a primal program diet here for the last 11 days. Last 11 days, not a single ounce of sugar. That's not to say I haven't had some fruit, which you can, but no, and only natural sugar, so to speak, out there. So in any event, right now the Dow is up, so just beating my chest out there. 11 days without sugar. It's a good thing. That doesn't mean no alcohol or anything either. Dow's up 92 points. S&P's, you don't really want to know about that, I don't think. But, did happen to catch just a little bit of the bull-bear binary option hour on Friday as I was running around. I heard Tom and his son Tommy talking about the Nadex platform and trading, and it just so happened, to coincide with the workshop that I'm doing on Wednesday. You trade the Nadex, use the Nadex platform, as the commercial says, your stop is your loss. I mean, so it's very easy risk reward system to trade out there. But as Tommy was saying, even with that, every trade is emotional out there, and that's the truth. And we don't spend enough time on truly understanding the emotions and what it is that just simply what it is that stops us. When you see a trade that sets up, it's like, here's the deal. And it's so interesting. I talk to traders, investors all the time, and if we just simply go ahead, the easiest way to teach somebody something is to link the known to the unknown. And of course, when it comes to buying things on sale, each of you buy things. If you're out in the market and you're buying something, oftentimes you're looking around to see if it's on sale, right? Maybe it's an impulse item. Maybe it was on your list, but it wasn't a need, but it was a want, and you walk past it in some retail store and you see it and it's on sale. It's a good price. What do? Boom. You don't even really think about it. You take action, right then and there. Well, it's not a lot of difference when price is pulling back into an area and it's setting up a pattern. The only difference is now you're sitting there saying, well, is it going to go lower? It might. But your pattern sets up, so that's why I like to really teach you about the importance of bullish and reversal candles, because if you're looking for the market to communicate to you that the trade has likely now been confirmed, not likely, that it has been confirmed and now is likely to go in the direction that you're looking for, that's the way that the market speaks to you and I out there. But it's about really dealing with those emotions and understanding how to deal with and why we do the things we do. And so I can teach you all of these great technical tools, and they are fabulous. They are great out there. But until you actually control the emotion piece of trading and truly get an understanding, and that's what I'm going to teach you about tools that will last for a lifetime that you'll be able to teach to others. I spent yesterday afternoon with my daughter, before before she's getting ready to pack up and leave University of Florida. And we spent some time just really, me being able to pass along this, what I think are excellent tools to assist you, whether it's trading, well, it doesn't matter whether it's your health, your wealth, or relationships. Those are the three areas in life that you have to use the so-called psychology of trading for and understanding why we do what we do out here. We try to understand what the markets are doing. You know, we've got a lot of emotion inside the markets, as I say right now, with one day the bulls feeling good, the next day it's the bears feeling good out there. At the end of the day, both parties are just simply beat up out here. I don't want you to get beat up. I want to be able to help you navigate through these markets. If we take a look at what's going on right now inside of the summation index for the New York Stock Exchange, guess who's in control, even with the markets being up right now? I can tell you it's still the sellers that are in control. Until the buyers are able to take out that zero line, until they're able to get enough net advancing issues. You might ask what that number is. I'll give it to you. I've got it written down, I believe, off here on the side. It's 1,620 net advancing issues. All that they're doing is, they're ready to be fourth and out, to punt the ball. I won't know till the end of the day. They're not that far. What did I say? 1,620 net advancing issues. Right now, let's go see where we're at inside the New York Stock Exchange. Where did it go? Should be right in front of me. It is right in front of me. I just can't see it. Good Lord. Talk about needing to get, where the heck did it go? Oh, it's right here. 1288. I knew it was there. 1288 is what is where we're at. You need 1,620 net advancing issues in order for the bulls to really flex their muscle out there. So New York Stock Exchange. In fact, let's go see what the retracement level is inside the New York Stock Exchange right now. Let's just go see where we are at out there. So I don't want you to get too excited if you're a bull. I don't want you to get too excited if you're a bear out here. That's the Dow. I want to look at the NYSE. The Dow is stronger right now than the NYSE, but that proved its point to us on Friday when it was trading back above its zero line. Now, if we're just going to take a look at retracement levels, what I want to do out here, and that's a retracement off of the recent high. That's at a price point of, it's at the high from April 27 down to low out here on April 30th, very close to the 0.786 retracement level, 11,198. But you know what? It's trading inside that swing point high. It says it wants to go test those highs. Steve Rhodes with TFNN. Be right back, folks.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the Future Economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 83 points. S&P is up 11. Composites up 32. A little bit of headwind out here for the markets this morning. You would know it by taking a look at price, but you do have the euro Japanese yen currency pair. That's no, it's just a slight headwind. It's kind of like a breeze. But like I am your pilot, and I just have to make you aware that there's potential for some bumpy patterns ahead as the euro Japanese yen continues its advance out here. Now it's made one heck of a move to get up into that 0.786 retracement level, and it hasn't really moved at all since March of 2015, the middle of March out here. But the reality is it hasn't really moved much if you come all the way back into the January 2015. So sort of like our markets, right? But it is headed up towards that resistance level in the 137-ish area. But right now, if it were moving higher, right as we speak right now, these markets would be really taking off topside, and the summation index would truly be breaking above the zero line. I mentioned New York Stock Exchange not above its zero line. But yet we saw price was trading into the swing point. So it really says to me that we ought to see a test of those highs. We ought to see this get back above zero. And let's not forget that there is nothing more bullish than a failed bearish pattern. And we come back to the New York Stock Exchange that it did at one point in time. And what I mean by that is between the trading session of April 14, 15, 16, and 17, it was that 15 and 16 session that formed that island reversal pattern out there. And that was taken out to the upside. And that New York Stock Exchange is actually sending a message to you and I. That is actually typical of the price pattern behavior inside the markets this time of year out here. I know people get so caught up into that cute, fancy expression out there of sell in May. Yeah, but you got to know when to sell in May out there, and it ain't the 1st of May typically. And of course, that's what we saw here on. That's what we saw here. Well, and I will say this: if you go back just simply the last 10 years, and you took a look at now this year being year number 11. All right, so if we take a look at year number 11, so you go back the 10 prior, you're going to see that on May 1st, or the first trading session, I should say, in May. 5 were up, 5 were down. Now we got 6 are up and 5 were down. And 11's not your great sample size, but just go back and test it out there. And then you're also going to find out that May 1st, or that first trading session, or the April 30th, last trading session in April, doesn't like it marks the high and that's it, throwing the cards and the towel and stuff like that. In any event, On New York Stock Exchange right now, as we speak, a little bit of a toss-up. Still the sellers in control there, is the way that I'm calling it. If we take a look at the NASDAQ Composite, really the same thing out here. Now, the NASDAQ Composite, it's trying to get into the trading session from April 27th. The low there is 5,053 and a bit of change. We've been up to 5,043 and a bit of change out there. So if you close inside 5,053.54, it says you're likely going to go test the highs. Its price oscillator, as we speak right now, still below zero. It says that this is still the sellers in control. Sellers really ought to be licking their chops here right now. So if we take a look at the game out here between buyers and sellers, we're really at the level inside of the New York Stock Exchange, inside of the NASDAQ Composite, two larger market breadth indices out here. This is really, if you are on the if you're on the firing side of the sellers, this is where you got to be licking your chops, because this is where price is truly up against some potential resistance area here. But if they fail, it means that that line of selling that's out there has fallen back to someplace else. Where? Well, I'd have to say it'd be falling back all the way up to the highs at the 51.19 area would be the next level that you would take a look at. If we go look at the longer-term charts out here for the NASDAQ Composite, the NASDAQ Composite, is trying to get above its monthly horizontal trading range number in the 5,065-ish area. It's trying, and if it can break above that, it says it's going to, run into resistance probably around 51.92 out there, but still strong like a bull inside the market. If we go look at the VIX index, what's the VIX index? What do you know about the VIX? VIX index has rejected that 50-day exponential moving average for a long period of time, since the early part or mid part of February out here. And that's why it's been a frustrating market for many, but it's just simply been kind of this gradual move to the upside, and that's how you use that VIX index. That's how you use that oscillator. You use it as a 50-day exponential moving average, and you forget everything else about the VIX index. If a price is rejecting that 50-day as it has for so long, price is going to simply continue to move sideways to higher. That doesn't mean you don't have your down days out there, but it does mean that who's in control are really the buyers. This is a great liquidity gauge using the 50-day exponential moving average for that level. That, by the way, is priced at 14.19. You're trading at 12.90 as we speak right now. So you got liquidity that way. That's going to offset any of the headwinds from the euro, Japanese yen. If we take a look at some other things that are moving, so that's, but let's go take a look at gold. For those of you who didn't catch the first hour, gold running right into resistance of the descending price channel. Now it's trying to break through that level. It would do itself very good to close above 1186.90. Now, I'd have to say you really want to see close around where it's at right now, around 1191 or so. That would be just slightly above the descending price channel. But we did have a full moon that came in late last night. Full moons typically mark initiation moves inside of gold, whereas in the prior month, in April, the last full moon, it came in over a weekend. And it came in over a weekend, and we didn't know whether it was Thursday because it was Good Friday that the market was closed. The gold market was closed out there. So we didn't know which high or low to actually take out. And maybe because of that, it was confused. That's really not the case out there. But we didn't see much in the way of movement inside of gold. Will we see movement this time? I don't know. I just know this much. It's a pattern to pay attention to. And at this stage here, looks like if we can take out this descending price channel area around the 1190-ish point, gold has a real good chance not just to run to the highs, but actually break out. And break out and form an A to B equals C to E to the upside is what it could do. If you want to know what that price projection would be inside of gold, you'd be looking at the A point down around March 17th, your B point out here around April 6th, and your C point being last week on Friday down at the 1168 area. That would say that gold could easily run up to 1251, maybe even the 1273 level. That would set up a larger Gartley sell pattern out there. What I mean by that is if we look at retracement levels from the January 22nd high down to the low on March 17th, you'll see that at 1244 you get your 0.618 retracement level. So just above that at 1251 becomes your 1-to-1 A to B equals C. That's the first place that you would be looking for maybe a larger sell area into gold. Of course, it all depends on how price is hitting that level, if it in fact even can hit that level, which it can do, but we're not anywhere near that price move as we speak right now. That's what's going on inside of gold. If we look at silver, you've got silver up 46 cents, so a decent move percentage-wise, looks like about 3% or so out here. But it is, and maybe we get I don't even know what what I can say here about silver. It's not much. It's trading above its TAS market profile high. It's really just kind of consolidating sideways here. But if it had a similar, it'll be up to gold. If gold can break out, silver will follow along with it, and that would then set up a potential A to B equals CD pattern inside silver. That takes you really back to the high. 1770 is your 1-to-1 A to B equals CD. That just takes you back to the most recent highs is what I should say. That's the March 26th level. That's what's going on inside of silver. Light sweet crude back up 48 cents as we speak this morning. No big deal there. Likely to move just a tad lower to test the bottom of its rising price channel. If it can break through that, then 56.71 becomes its mark as far as its target area. That's what's going on inside of light sweet crude. To the upside price line, we talked about that. We haven't looked at Intercept Pharmaceuticals. Let's go take a look at Intercept. That's up $14 right now. Let's go see what this is doing, what kind of patterns we have. I know you, and it's like, you're going to get tired because it's like I'm saying this till you're blue in the face out here, but this is just really consolidating sideways. Now, Intercept Pharmaceuticals has a high volume high. Now, I mean, it's got a really high volume high. It looks like 52, if not all-time high. Let me put this, I think this would be all-time high. So let's just put this on a monthly chart. No, I don't know what the heck I was thinking there. It's certainly not all-time high. So 52-week high. But let's go back to the daily out here. And it does have a daily untested high. Looks like it'll get back there, 349.08 at some point out here. And that is Intercept Pharmaceuticals. ICPT is its ticker symbol. Biogen, let's go take a look at BIIB. It got crushed here, as did many of the biotech stocks. But the reality is what Biogen did, talk about also, in this case here, it is an all-time high, but to also talk about high volume highs that have not been tested. Biogen fits that bill. BIIB, the high is 480.18. The volume on that trading day was 10 million shares, 10.6 million shares. What does price do? It comes back to a sign of strength area. That sign of strength area took place on January 30th. That was 4 million shares to the upside, which was tested with 2.6 million shares. 372.75 has now been tested. There's still a gap down there. Gaps are your friends. It is our first test of that level, true first test of that level. Right now, says price probably moves up into about the 410-ish type area. The top of this gap, which is 410.87, which is the April 24th level. If it can close the gap, if it can repair that window, that's what I like to refer to it as. And in order to do that, you would need to see a close above 421. Then it would be telling us that price would go test that high out there, that all-time high, that high volume high out there on the daily chart for Biogen, BIIB. Otherwise, right now, expect resistance to be in the 410.87 area. Let's take a look at. Let's look at the IBB. Let's go take a look at it. Having truly, Biogen being a part of that and having truly been hammered out here. What did the IBB do? It has a swing point from March 26th. It has 5.2 million shares. It came down light volume. So here, the leader in the clubhouse that has been really giving the NASDAQ fits out here, the reality is it cannot bust them to the downside. It had some nice volume. As it was moving down there. Had nice volume of 4.3 million shares on April 27th and a repeated volume of 4.3 million shares on April 28th. But all that was telling you is you were moving into a swing point with, I take that back. It was not moving lower with volume. How about that? All it was doing was coming back to test that swing point of 5.2 million shares and did it with light volume. It can't bust them down. What's it going to do? It's going to go bust them to the upside. In the case of the IBB, it says you probably get back to between 363 and 375 out there. Yeah, that's the and it would really confirm that message if it can close outside of the 345.13 level today. That's the swing point for March 26th out there. So that's what's going on inside of the IBB. But don't forget, this market's got something for bulls, something for bears each and every day out there. Hey, let's go take a look at Apple. I haven't looked at Apple here for a while. So the release of the iWatch. Did you get an iWatch out there? I didn't. Of course, I don't plan on getting an iWatch either. Not because I'm against eyes or watches. I just don't like to, for time I check my phone for the most part out there. And yes, as Al in the studio says, I prefer the shoe phone out there versus your iWatch. In any event, you've got Apple's swing point is February 24th. That's one area for us to be paying attention to. That high was 133.60. Of course, we know we've got a newer swing point, which is a key reversal trading session. Price is traveling inside it as we speak right now because the low of that is 129.57. Price is trading at 130.79. If Apple can take that out, meaning above 134.54, Apple is going to go ahead and run up to the 150.60 level. That's what's going on inside of it. So it's got resistance up at the 134.54 level. Let's take a look at things to the downside. LinkedIn. Let's go take a look at LinkedIn. LinkedIn is off $3 this morning. LinkedIn wants lower price. I say that because LinkedIn is right now trading below a sign of strength out here. And maybe this was a 3-gap play, I don't know, but it's coming down to that first gap, and that first gap is 186.95. Now, it may be worthwhile to really watch if, in fact, price I can't guarantee that price is going to get down there, but it likely is going to get down there, 186.55, 186.95, somewhere right around that level. That happens to be the July 31st high of where we saw a sign of strength begin. And that began on August 1st with 10.5 million shares to the downside. Now, let's put this in perspective. We had 16 million shares to the downside as this thing gapped down on Friday. You're trading below that sign of strength of 203.74, which tested on Friday. If it can't, and so if you're looking for long-term holding inside of LinkedIn, and I'm not saying you should be, I'm saying if you are, then 186.95 would be the area that you want to be watching like a hawk. Ideally, what you would see is you'd see that level hold as support. Maybe you'd see some kind of little sign of strength coming off there. But if that level fails, then you're looking at potential run all the way back down to the 140-ish level, 136.02 to 143.76, and that's your May 7, 2014 area. Now, swing point wise, from swing point to swing, to take a look at retracement levels, your 0.618 area is also in the 189.56, so it's right around that gap area. That makes that a fairly important level to be watching, and that is ticker symbol LNKD. We've got the Dow up 81. The S&P is up 9. Summation index for the composite still in sellers' hands out there. New York Stock Exchange, the same thing, but it is the Dow that's trying to lift all indices higher. Be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 73, S&P is up 9, Composite 22. So let's go take a look at the shorter-term charts here. For the S&P futures contract. Let's take a look at where we're at. If you're watching us on Tiger TV, upper left-hand corner, from upper left to right, and then it goes the 30-minute chart. Center 60-minute, upper right is 120, lower left is a 244-hour chart. Center bottom is the 5-hour chart, and the lower right is the daily chart. S&P futures contract. Key level to be watching is, in my opinion, today is going to be 2109. You see a close above 2109 today. It's trading at 2111. It tells you we've got more upside action. Doesn't mean that it's a breakout. Just says that we've got more upside action. Of course, above 2109, you do have to worry about that consolidation pattern inside the ES Mini that says that it could, in fact, be a breakout. Support. If we take a look at support inside the ES Mini, I would say on any pullbacks, which we're seeing one right now, so that's not unusual, is right around the 21. I'm going to say use the 2102-ish area. 2099 to 2102. You see it close back below that, and now then we have the sellers flexing their muscle. Remember, we looked at the summation index out here for both the New York Stock Exchange and the NASDAQ Composite. It is sellers that are still in control. I've maintained that even with this nice little movement that we've had inside of the markets. So you have price oscillator, summation index, really great tool to help us understand what's going on trend-wise out there. So that's what, as I say, I just go back to the S&P because that's really easy for you to track. Should be easy for you to track, and those are the parameters that I would be looking for. If price just comes back, gets below that 2109. I'm using the 2109 level as a area, a close above, and being short is a real tough thing. Being long, how much movement you've got to the upside, I can't say. Your earlier entry point would have been Friday out there, Thursday afternoon. But the if price pulls back to 2102 and starts to bounce from there, all I can say is we'll take a look at tomorrow and see where the summation index, where the price oscillators are. So this market, whether you like it or not, it's got a little bit for bulls and it's got a little bit for bears out there. And I'm not trying to be Not trying. Actually, I like to have conviction, one side of the market or the next. I like to have conviction. And sometimes you have to have conviction that is neutral. Sometimes you have to have conviction being able to take, you always have to have conviction looking at both sides of the trade out there. In fact, when you take one side of the trade, if you really want to improve your trading, spend more energy and time figuring out what you missed. Go look at the other side of the trade. Do not assume that you are correct. Go figure out what it is that you've possibly missed out there. Look, that was perhaps the most valuable lesson that I learned back in the 80s at a IBM-sponsored Harvard Business Education week out there, because that is exactly what Mr. Watson taught everybody to do out there. It was to prepare. And that's what you do. You prepare for a trade. That includes preparing yourself from a psychological aspect, which I'm going to do this coming Thursday, and teaching you how to do that. Teaching you, it's more than just about trading out there. And you have to prepare for the, one cancels the other. You have to have both sides of the trade figured out there. So you've got to prepare. But part of that preparation is, and then you've got to prepare in trying to go close a deal on a sale. But part of that preparation is figuring out what it is that you missed. Start with a clean slate. Come back and say, if you did take the other side of the trade, try to justify why and what you would be looking for parameter-wise. So if you do all that stuff out there, you will be just fine. And remember, stay tuned, because our man Basil Chapman is up next, and he's going to tell you what the markets are doing based upon the Chapman wave out there. So have a wonderful, marvelous, magnificent, magical Monday. And I'll see you tomorrow morning. Take care, folks.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's Opening Call newsletter today on the front page of TFNN.com.
This is TFNN.